We'll be starting this particular webinar. As you all know, this webinar would be on commodity markets, how you can trade in commodity markets, how you can make money in the commodity markets. The webinar would be a mix of video and audio webinar. So if you have any queries, please do note down those queries. We'll be taking those queries at the end of the webinar session. As you can see, this is our empowering investor program, and in this program what we achieve to do is we empower the investors in the financial markets. We have multiple ways to educate the investors. We educate the investors through webinar, investor education and training seminars. We write on some articles on the investor education, financial inclusion seminars, and we do a financial query solving. Now this will be the content flow for the webinar. Firstly, we will be introducing ourselves, which is the Epic Learning Organization. Then the need of the webinar, basics of commodity market, the trading strategies in commodity markets, technical analysis of commodity markets, the Epic research methodology, our product profile, and then we'll be moving on to question and answer. Now, Epic Learning is a company which is involved into education and training. There are many domains which we cover: equity market, commodity, options, technical analysis. We do training for sub-brokers, investors, employees of stockbroking companies, and anybody who wants to get trade in the financial markets. The need of this particular webinar. There are many traders in the commodity markets, and I am very sure that most of you who are attending this particular webinar, they all must be trading in the commodity markets since a long time. But what happens is, a retail investor, when he comes to the market, 90% times he is in a loss. So whether the market is rising or the market is falling, a retail investor or a retail trader is always in a loss. The education system or the investor training in this country is still very low. Today there are many companies who offer financial market services, but there are very few companies who even care to educate their investors and traders in the financial market. And the key to the growth in the market is only when the investor is educated. If the investor is not educated, the breadth of the market will start reducing, as we have seen in the equity market since last 2.5 years. The overall breadth of the cash market has reduced significantly. So that is the reason why we needed this webinar. And this initiative of doing this particular webinar is to educate the investor, because if investor is not there in the markets, every intermediary in the market will be useless. So if we need to educate, if we need to grow in the financial market, we want that the investor should be educated. Now, why investor education? Basically, let us see some facts and figures. Today, almost 95% of the retail investors lose money in the markets, and only 5% of them make money in the markets. But remember, it's a zero-sum game, which simply means that if I am losing money, somebody else in the market would be making money. So the point is, if 95% of the traders are losing money and only 5% are making money, what is the reason why that these 5% are making money and 95% traders are losing money? That has to be understood, because money can be made. If I am losing, you would be gaining, and vice versa. So if you are gaining, why not I could be on the winning side? Now currently less than 3% of Indians are currently exposed to the direct equity market, wherein in USA as much as 44% of the total savings of the country go to the equity market. In India today, almost 57% of the total money saved is kept in the saving bank account. That money is sleeping with a mere 4% return. So if you take an inflation rate of 7%, your saving bank is giving you a minus 3% return, because the value of money is deteriorated by 7% and you have only gained 4%. So the money which you have kept in the saving bank account, in fact you are losing out the opportunity cost of that money which you have kept in the saving bank account. Now let us see some basics of commodity trading. The regulator in the commodity market is FMC, which is Foreign Market Commission. Two exchanges, MCX, NCDEX. There are four types of commodities: precious metal, base metal, energy. These three commodities are traded in MCX market mainly, and agriculture commodities are mainly traded in the NCDEX exchange. Commodity trading, the instrument type is future contract. The trader has to pay 5 to 10% margin depending on the volatility. The settlement is on T+1 basis. Expiry ranges from 3 to 8 months. A trader can very easily do positional short selling. So which means if the trader is feeling that the market would fall from here, he can short that particular contract. Non-agriculture commodities are directly linked to the US market, and agriculture commodities mainly linked to the Indian market. Now let us move on to the next slide, which simply states why the retail investor is losing money in this particular market. The exact reason of why the retail trader is losing money in the market, there is an irony, or the pity of the retail investor is that he buys at the top and he eventually sells at the bottom. It should be the other way around. He should buy at the bottom and he should sell at the top. So this is the reason why the trader in this country is losing money, because he buys and he waits for the market to fall, but then if the market is not falling, he goes out there and he buys in the market, and the point at which he buys in the market is the highest point of that particular stock or the commodity. So this is the reason why the traders are losing money, and he sells that particular commodity or his trade at the lowest point of the market. Let us ask some questions from you before we move on to the webinar. Now, first question is that has every trader on the street lost money in this market? Has everybody lost money? No. The answer is no. Because if I am losing money in the market, somebody on the other side of the market is making money. Second is making money purely on luck in the markets? No. Making money is not purely on the lucks in the market. Is there something known as trading strategy, technical analysis in the markets, and do they really work? Yes, there is a full-fledged analysis method which is known as technical analysis, trading strategies, and they really work in the market. Can a retail trader really earn and sustain for a longer time in the market? The practicality is that 99% of the traders, in fact, which are present in this particular webinar, must have lost the money. I believe only 1% of the trader who's attending this particular webinar must have made money, and rest of them must have lost money in the markets. But the point is, the practicality is that the money could be made. We are not saying that with our research or with somebody else's research money could be made, that is another point. But the point is that the money could be made in this particular market. That is the main point. Now, what is the trailing stop loss strategy? We'll be understanding this strategy in the webinar later. Now let us see this particular chart, how the technical analysis work, what all strategies could be used. If you see similar kind of charts in front of you, how you can take the maximum advantage of this particular chart. As you can see, there are two tops. This is the top and this was another top which was made. But this time when the stock came at this particular top, it broke away from this particular top and moved higher. You can also see that the stock also broke above this particular moving average line with a huge volume. There was a huge volume which was there. So as you can see, this is double top formation breakout in the markets. So this is how you can see how the markets move. You can use the technical analysis in the markets. Risk return appetite. Now what is the risk return appetite? Now, simply speaking, the risk return appetite is how much risk are you ready to take for X amount of return in the markets. So ideally it should not be more than 1:3, which is if you are taking the risk of 1 rupee, your return should be around 3 rupees and vice versa. But the problem in the market is that the traders do not keep a stop loss. This is the major problem. So if you do not work out your risk return strategy before entering the trade, this is the most dangerous point. Normally what traders do is that they enter the market without a proper stop loss or a risk return strategy on that particular trade, and they keep on trading in the markets. So it is very important for every trader to have a proper risk return strategy and have a proper stop loss. Now how to maintain risk to return appetite and keep booking profit. As you can see, what we have done here is we have used a technical chart. We have used a moving average on this particular chart. As you can see, this is a short-term moving average, the green line which you can see, and the red line is the long-term or medium-term moving average. Now as a trader, what I had done is I had bought this particular security out here when there was a breakout on the counter. I kept on booking profit. I booked 25% profit here at point number 1, 25 here, rest 25 here, and the whole trade was squared off here. The last 25% was sold here and I exited the trade. Now this is how you can maintain your trailing stop loss. You can maintain your strategy and you can be in the trade for a very, very longer time. So let's say I bought 10,000 shares here. I sold 2,500 shares here. I kept on booking profit. Again I sold 25% share here. Again I sold 25% share here. And the rest 25% shares were sold out here. So I had taken the whole movement of this particular share. So if we see, this was somewhere around 56 rupees. Now I have made this position till 66 rupees with a trailing stop loss strategy, and I kept on booking profits as the market moved on. I have simply used the moving average line. So this is the most simple technical analysis indicator in the market, which is known as moving average line. Now let us understand what leveraging is. What normally happens in the market is that every trader is being given a trading limit. So the trading limit ranges from 10% to 20% of the base amount. But the flip side of the leverage is that 90% cases where the traders have exited their trading because of losses is because of the leverage position. So what happens is, let's say I take 20 times limit. So I've invested 1 lakh rupees and my broker gives me 20 times limit, which makes it makes it 20 lakh rupees. Now even a 5% loss on the 20 lakh rupees trade would wipe off my 100% capital. So 5% of 20 lakh is 1 lakh rupees. So this is how dangerous trading with leverage is. We suggest that every trader should not have a leverage of more than 3 to 5 times, which is a very ideal leverage for every trader in the markets. As you can see, stop loss is a very common word. Almost every trader, every broker, every investment advisor uses this word when they trade in the markets. A stop loss is nothing but limiting your losses. You know that at what extent you have to book your losses and exit from this particular market. That is known as a stop loss. As you can clearly see in this picture that the stop loss would always be required when you do risky things. So as you can see in this picture, adventurist is doing a bungee jumping. So imagine doing a bungee jumping without this particular rope. So this is how the stop loss acts when you trade in the markets. So the stop loss is like the rope which prevents you from getting into the complete hole. Let us move on to the next slide. Now here we will be understanding a very simple concept in technical analysis which is known as a support line. What is a support line? So support line is a simple term where two or more bottoms, or technically known as troughs, join at a particular point. As you can see in this particular counter, the support was formed as 255 rupees, and then the stock eventually moved from that particular point up till 330 rupees. So almost a movement of 80 rupees in that particular counter. So this is how you can use support in your normal technical analysis. Before moving on, before taking on the trades, you can simply see, okay, whether the counter, whether the commodity, whether the stock is on the support or is on the resistance. Should I enter? Should I not enter in that particular trade at this particular point in time? So this is a very simple technique to see that whether the counter is on a support or a resistance. Now this is the resistance point. As you can see, contrary to the support point, or resistance point is where the stock sees the supply or selling in the counter is being seen. There are 2 points where the counter formed a resistance, which means this particular price point, which was somewhere around 50 rupees on the counter, formed as a high resistance on the stock, and the stock started to turn back. It turned up till 25 rupees. So it retraced almost 50%. It retraced 50% from the top. So as you can see how effective the support and resistance is. So if you see a counter is at its resistance and the counter has not broken above its resistance, and in fact it has fallen from its resistance, you should avoid entering into that particular counter. Let us move to the next slide, which simply states what a trend line is. Now, simply speaking, a trend line is where we join the peaks of that particular counter, peaks, or for that matter bottom of that particular counter. As you can see here, we are using a resistance trend line. The resistance trend line is formed by joining the peaks of that particular counter. So as you can see, there are different peaks, 1, 2, 3, 4, and I have created this particular trend line. This is the point where the share moved about the trend line, and the market started rising. So as you can see, the trend line breakout was somewhere at 400 rupees and the stock rose till 1000 rupees. So these are very, very simple techniques which every trader, every small trader, investor, sub broker, or maybe a dealer, RM, they can use in their normal trading, and they can use the technical analysis. Technical analysis is a very, very simple science. If you understand that particular science, you practice that particular science, you tend to create your own strategies in the technical analysis. Simply speaking, we have seen a moving average and a trend line. So in fact, these moving averages, trend line, etc. are very, very easy to use and very, very effective means of technical analysis trading. On the next slide, you will be seeing the use of moving averages. As you can see, this is the moving average which we have drawn on a particular counter. As the share moves above the moving average, it gives a buy signal. When it moves below the moving average, it gives a sell signal. It's a very, very simple technique to use. If the share moves above moving average, it's a buy. If it moves, crosses and moves below the moving average, it's a simple sell. As you can see in this particular slide, the moving average line is used as a support and resistance. It's a fantastic use of moving average, where we use the moving average line as a support and a resistance. This is the resistance for that particular moving average. This is the support line for that moving average. So the moving average is used as the support out here, and it is used as the resistance out here. I'm sure that many of you must be having many queries as I'm taking through the session, but we request you to keep all your queries on hold, and we'll be taking each and every query at the end of the webinar. So request everybody to keep their queries on hold. Okay. So now this next slide, this states the use of RSI, Relative Strength Index. Let us straight away move to the practical implementation of the RSI. As you can see here, there is an oversold region and there is a overbought region out there in the RSI. Now, this is the overbought region, this is the oversold region. Below 30 is the oversold and above 70 is the overbought region for the RSI indicator. This is the 14-day relative strength index for this particular counter. So what happens is simply at above 70 the counter is in overbought region, below 30 is in oversold region. Now let us see how to use this particular RSI line. Now in this slide what we have seen is when the RSI is moving below 70, it generates a sell signal. As you can see out here, let me use an highlighter. As you can see, the RSI has broken below 70 and at the same time there was a sell signal generated and the counter fall. Out here as you can see, this is a buy signal generated. RSI has moved above 30 and a buy signal is generated and the counter moved above. So this is how RSI can be used. It's a very simple technique and very effective. Now we get many queries in our training sessions when we take the paid training webinar sessions on technical analysis. The technical analysis is not very easy. The trader is very fearful of using technical analysis. Every trader feels and thinks that technical analysis is not for a retail trader. But we have made technical analysis so simple that even the most what we can call simplest of investor can use technical analysis in daily techniques. It's a 20-30 day time period in which we teach complete technical analysis. So those 30 days can change your life. We normally, when we were opening the webinar registration, we received many calls throughout the country about inquiring on the technical analysis, and some traders told that they have made a loss from 2 lakh to 20 lakh rupees. So although it is not surprising for me, because I keep on hearing, I've heard traders losing 20 crore rupees. 20 lakh, 10 lakh is not a big amount, but for a retail trader, a 2 lakh, 1 lakh, 50,000, for that matter 5,000 even, is a huge amount. We suggest that every trader should learn technical analysis before entering into the markets. They lose lakh of rupees, but why not to invest some amount in learning technical analysis in the markets? So investing that amount in learning technical analysis is a very small amount. In fact, you can get the whole amount out of single trade when you use technical analysis in the markets. So in fact, I suggest every trader to learn technical analysis. It is not that you should learn it from us or from a particular organization. You can learn it online also. There are many online sites. We also teach technical analysis online. So this is how RSI can be used easily. Now that's a fantastic use of RSI, where what we have done is we have used trend lines on RSI. As you can see, we have drawn a trend line on RSI indicator. So whenever the RSI has moved above the trend line, there is a buy signal. Whenever it has moved below the trend line, it's a sell signal. So now the trader does not have to move for the 70 or 30 range or whatever the range is there. He can simply use a trend line and predict the movement on the RSI. So that was a short presentation on how you can use technical analysis in the markets. And these are some products which Epic Research, our parent company, has in the commodity markets. This can also be found at epicresearch.co. These are the premium packs. These are the education services which Epic Learning is into. We normally run education courses, training courses on equity, future and options, commodity, currency, financial planning, mutual funds. We train investors, traders, sub-brokers and employees in the financial markets. So anybody who wants to learn, they can contact us. Now we'll be opening the forum for the question and answer, and we'll be taking each and every question. So if you have any question, or if you have already put in your question, we request you to type your question in the chat section and send it to us. We'll be more than happy to answer those queries. So now you can send in your queries if you have. Okay, the query is that what is the cost of training? We have different courses starting from 2,000 to 10,000 rupees, and that's the complete cost, which is an online course. So you do not have to travel to our institute, which is in Indore. You can sit at your home. It's the simple way which you are learning this particular thing. In the training, we have a two-way communication. So in the training, you can ask your question through voice. The chat is not, you don't have to chat. You can simply raise your hand, we'll be unmuting you and you can ask your queries. Okay, another question, can you explain RSI once again? So RSI is simply speaking relative strength index. Let me go back to the RSI page. As you can see on this particular page, RSI is nothing but a simple use of indicator relative strength index. So if the stock, if the RSI is moving below 70, it's a sell signal. If it is moving above 30, it's a buy signal. Okay, we are also receiving some queries on the levels on silver and gold. So this webinar is, we do not aim to answer those queries, so please do not put in queries on levels. Okay, so what is the full form of DMA? It's daily moving average. Another term which is known as EMA, exponential moving average. Another term which is known as SMA, simple moving average. Okay, how to invest 50,000 in the best possible way? It's a very broad question to answer, but in a very simple terms, if you are a very new trader, you do not know how the markets work, I would suggest that you invest 30,000 rupees in a mutual fund and rest 20,000 rupees in equity or commodity market with a view of 2 to 3 days. Do not trade intraday. Intraday is a very risky trade for a new investor. Okay, another question after they hit my stop loss stock return in the price range. It's a very common question and I keep on receiving that question. In fact, in every webinar, every seminar I conduct all over India, that once the stock hits the stop loss, the stock again retraces and moves above. Now there are two answers to this particular query. First is when the market is in the volatile zone. This is a very common thing. So the trader should avoid trading in the volatile zone. It is not compulsory that you should trade every day. If you feel that the market is highly volatile, touching the highs, touching the lows again, touching the highs again, touching the lows again, you should exit from the market. Always use moving average. Use a 14-day moving average to see whether you should trade or whether you should avoid that particular trade. Okay, sir. So now a trader has a query that they want to understand about the crude oil and they want to join the classes. So you can learn our technical analysis. You can join the classes. You have our numbers on the screen and you have our email ID on the screen. After this webinar, you can have a chat. Yes, there is a query, do we give a buy sell call? Yes, we give. The Epic Research company, which is the parent company, they give a technical analysis. There is a query on an indicator known as parabolic SAR. The full form of this indicator for everybody who does not know is parabolic stop and reversal movement. Although that's theoretically that indicator looks very good, but practically, believe me, when I have learned technical analysis and I have been using technical analysis for a long time, that is an indicator which you should simply avoid. Okay, though the moving averages which you are using in the PPT, is it simple or exponential? Those are exponential moving averages. How you can use proper amount of stop loss? Okay, so as you have seen that the stop loss is easily ascertained by the use of a moving average. So wherever your moving average is, that acts as your stop loss or a trailing stop loss. What is the full form of RSI? Relative Strength Index. Okay, any software? There are many softwares available in the market, but frankly speaking, software has nothing to do with the quality of research you generate. We have seen many good analysts who do not use even a software, they only use a National Stock Exchange. Although there are many softwares, Falcon, Metastock, Iris, GetCode, Code Center. And if you learn, there is a query, if you learn technical analysis, RSI will be included in that. Yes. If you learn technical analysis, that's a 30-day course where we will be starting with basics of technical analysis, the Dow theory, chart patterns, double top, head and shoulder, inverted head and shoulder, ascending triangle, descending triangle, moving averages, stochastic, MACD. It's a huge course. What is the difference between DMA and EMA? DMA is daily moving averages and EMA is exponential moving average. Okay, there is a query that there is a student who wants a placement also. Yes, we have a placement cell also which can have you placed. Okay, can we limit our losses using stop technical analysis? Exactly, technical analysis is used for limiting your stop losses. There is a query on asking the top 10 equity stocks. So in fact, the top 30 stocks in the Sensex could be the list. What kind of investment is safe for the new traders? In fact, for the new traders, I would suggest that you should invest your money in top Nifty stocks. So let's say you have 1 lakh rupees to invest. Divide that capital into 5 parts of 20,000 rupees. Whenever the market falls, go out there, invest 20,000 rupees in the Nifty stocks or simply buy Nifty Bs, which is the Nifty ETF. keep on buying whenever the stocks fall. How much is the cost for commodity classes? It ranges from 5,000 to 10,000 rupees. You can have a detailed discussion on the mobile number you are seeing on the screen. I have another question, that is the moving average available only on the daily candlestick chart. In fact, moving average can be used in daily, weekly, or for that matter any chart. It could be a 5-day chart, 10-day chart, but as a technical analyst you have to clearly demarcate that which duration you want to use that moving average for. So it could be a 7-day, it could be a 14-day, it could be a 35-day moving average. So the moving averages which we are using was exponential moving averages. Okay, what are the good parameter to select the BTST counter? Oh, it's a very good question. In fact, there are 2-3 parameters to use a BTST. First parameter is that the stock or the commodity should be at or near the highest point when it is closing. So the closing should be equal to or near to the highest point first. Second, it should have a clear-cut breakout on the daily and a 5-day chart with the huge volume. So if these two parameters are there, you should confidently go out and do a BTST. But when doing a BTST, remember you should not be leveraged. So if you are having, let's say, amount equal to 1 lot of gold, buy only 1 lot of gold. Do not buy 2-3 lots of gold for a BTST trade. Which is better, DMA or exponential moving average? In fact, there are traders, there are analysts which use simple moving average, there are analysts which use exponential moving average. It is ideally a personal call. So when you use technical analysis or 50, 100 charts, 200 charts, you would be in a better position to create your own strategy. Does NCDX have enough liquidity? No. I also agree that some counters in the NCDX do not have enough liquidity. Okay, when you are trading in silver, when you should buy, when it is coming down or when it is moving up? Simply speaking, if you are using technical analysis, not on a fundamental basis, if you are using technical analysis, if the stock is moving up with a clear-cut breakout on moving average or RSI, you should buy that particular counter. Okay, they want to know which software we use on technical analysis. We use Metastock and Falcon for the technical analysis. Okay, for commodity, which time period for moving average you should use? Ideally, you should use a 7-day and a 14-day combined moving average for commodities. Is there any free charting tool? Yes, there are many free charting tools. You can go to icharts.in, that's a free website. Okay, so there is a trader who has 50,000 rupees and he wants to understand how he could invest ideally. So you should invest 30,000 into a good equity mutual fund and 20,000 should be used for trading in equity or commodity. There is a very fantastic question that if 90% of the people are losing in the stock market, who is the gainer? The answer is the gainer will be someone out of ourselves itself. I mean, if I am losing money in the market, someone else on the other side of the market is making money. It is a very common myth that only FIIs or HNI traders make money. No, there are many retail traders who make money. Which segment is best to trade? MCX is ideally best to trade. Can you hedge if you have 50,000 rupees? So no, ideally you should not hedge if you have so less amount. Okay, they want to know the name of the technical analysis software. It is Falcon, Iris and Metastock. The ideal risk reward ratio for commodity is In intradays, 1 is to 2.5 or 1 is to 3. It depends purely on the technical analysis or what kind of breakouts the stock has given. It purely depends on that. So it seems that we are almost at the end of the Q&A session. Okay. So there is another question that if there is a breakout on the counter and it again touches the low, what should we do? Ideally, the only solution to that particular kind of movement is that you should avoid trading in those times. When the market is highly volatile, so if it is touching highs and lows again and again, you should avoid in trading in the markets until unless it is broken above its 14-day moving average. Does NCX have options? No, sadly it does not have options now. How to identify buying trend or selling trend? In fact, the whole webinar was on that. You can use moving averages, technical analysis. There is a question which I guess I'm not able to understand because it is not completely. Is the DMA applicable only on daily candle? So daily candle means candlestick charts or what the person wants to ask. He should ask the question broadly. No, crude oil and natural gas does not have the mini lots. The fee for technical analysis is around 10,000 rupees. So when there is a question that is there any particular time period in trading day when the commodity or stocks become highly volatile? Ideally, when the stocks are volatile, those are avoid zone for the traders. You should ideally not trade every day in the market. You should trade only on 60% trading days in the month. Okay, there is a very good question, and I guess the problem of every investor that on the same commodity on television, two experts give opposite advice. What to do? You should shut all those guys out. You should use your own technical analysis strategy. So if you have 50,000 rupees, should you use hedging? No, should not use. Okay, there is a question that if he has joined the webinar late, so you can get the recording of our webinar on epiclearning.in videos page. You can get the recording in fact of our every webinar on that particular page. Which indicator is mostly used? It's the moving average. Does chart pattern work? Yes, they really work. When there is an RBI policy or company result, how you should trade? Ideally, you should either take your position before or after these particular events. Which is the best time to trade? Every time is best to trade. Okay, on the daily charts, should you use a 1 hour or a 2 hour candle? Ideally, 1 hour, 2 hour candle is too huge to use. When you are using a candle on a MCX, you should use a 15-minute candle. What is the role of number of buyers and sellers in the markets? Ideally, it's a very, very old thing to see if there are more buyers, the market would rise and vice versa. You should rely more on the technical analysis for the trading tools. So there is a query in options, but we'll be taking a webinar later on the option side. So at this point in time, as all the queries are done and we don't have further queries. We'd like to end this particular webinar. We'd like to thank everybody who attended this particular webinar, and thanks all. Thank you.